Hey, it's Sowell, and this is episode 75 of the Orange Pill Investor and little 5K update challenge for about 1 minute. I finally broke even at 11:05 a.m. today. I was super psyched, and then of course, stuff happens. So almost back to even, Steven, and this is all just part of how it works. This is I believe I have a long-term strategy with short-term high frequency activity. So every week we're going to roll a covered call to reduce our cost basis, put some money in our pockets, and then keep trying to grow the account actively. And something I posted recently about, it just kind of makes sense. So if you're a passive investor and you're just like, okay, here, take 10% of my money every week and you just give it to somebody else, well, he's going to take a 1% cut off the top probably to manage it. And then you have to trust them to be able to at least keep up with the market, beat the market, whatever. But even if you're just putting money into the SPY or the VOO, it's like, what kind of returns can you expect for not putting in any effort whatsoever? It only makes sense that if you're putting in effort, you should be rewarded more well. Now that doesn't happen to most people, because most people that that open up a Robinhood account, I think they blow up their accounts within 90 days or something. I think it's faster than that, but I don't want to exaggerate. So you have to trade well, but it just makes sense to me that if you do work, you're going to get rewarded for the work. I think what most people do is they just YOLO long out of the money calls or something, or you got to be panic selling. I mean, that's the only way you can really, or just choose the most horrible stocks. Like, I mean, if you're still clinging to the hope that GameStop is going to pump again, I think that lightning doesn't strike twice like that. The institutional investors are not going to be burned twice on the same stock like that. So the fix is in, I think, when it comes to things like that. But this one, somebody put me onto this one. So the cheapest mining stock that I own is HUT. It's like $9-10 or whatever a share. I think it's a little bit difficult to squeeze premium out of something that's cheaper than that, because there's a little bit of friction involved in every trade. There's a bid-ask spread, so you're gonna have to come down at least to the mid price, or maybe even a little lower. So if it says you're going to get paid $50, you might end up only getting $48. And then if you want to roll that trade on Friday, you're going to have to pay another $1 or $2. And so if you collect $100 premium and you pay $1 to open it and then you pay $1 to close it, that's no big deal. That only siphoned 2% of your profit of that trade. But if you're making $10 on a trade and you pay $1 to get into it and $1 to get out of it, now it's 20%. But somebody posted their results on this guy, and this was really interesting to me. I wish I could remember the name of the stock, but there was a wheat stock that was trading under like $2 for quite a long time, and I used to be able to squeeze like 3 to 5 cents premium out of it. And granted, we're only going to get, it's not a full trading week, so normally I would do this on Friday. But if you bought, not financial advice, but this would be great for somebody trying to learn. If you've got a chunk of money and you're like, I'm terrified to start trading options, then something like this could be good as just training. Get some reps in, see how it works. And a lot of these exchanges, you can just play with funny money and practice trading, but I don't think you get a full effect from that. Like, you kind of have to feel the pain of a bad trade, or just feel the weight of the importance is different between when you're trading nothing versus when you're trading real money. So even just buying 100 shares of this costs you $235, and you could get 8 cents, which really, see, here's the problem. The bid-ask spread is from a nickel to 10 cents, and this is probably in increments. Yeah, since there's nothing in the middle. Oh, that would be unfortunate. Sometimes you can trade at the actual penny level, but if this is in increments of a nickel, then you're really going to get screwed because Robinhood only displays the mark price, which is halfway in between the bid and the ask. But if you can't actually bid, let me just see if I can. I'm going to try to construct this. I'm going to construct a poor man's covered call. Ignore this. This is probably not a wise thing to do. So I'm not going to send this through, but I just want to see if it's going to let me place a penny or not. So let's try this. Boom. Seems like it's going to let me. And let me just put in something that I know won't get filled. So I only want to pay like 0.79 for this. It let me put this in. It didn't make me do an increment of a nickel, but it could just be that I created a poor man's covered call here. I don't know. This might be all right. But anyway, I thought it was great that the guy was trading this or found this trade, because you can actually get, if you can get $7-8 on a $230 investment, on 1% of the 230 would be $2.30, and 3 times that is like close to 7. So you could get 3% return even with this little contract, and I just think that's amazing. I mean, 3% a week is 150% for the year. 150% return. Now, here's why I don't like to go under $10, because cheap penny stocks and just cheap stocks in general, they're cheap for a reason. So Bitfarms, before the Bitcoin pump was down here at $1, and there's like no premium to be had there. You can cheat a little bit by going out farther. I generally do weeklies, but you could go out to something above, as close to 45 days as possible, but a little bit above that. So you could easily go up here to the 3.5 strike, collect $20, and then what you try to do in this case is every 2 to 3 weeks, you would take whatever profits you can, hopefully about 50% of this. So in that case, you'd be collecting about $11 over the course of 2 to 3 weeks. So that could be, if you did it in 2 weeks, that would be pretty good, because that would be $5 a week. That would be 5% over the course of 3 weeks. So 11 divided by 3, it's close to 4 actually. So it's actually still pretty legit. And then you would just roll this every few weeks, and then in 3 weeks you just roll it to another 45 days and another 45 days until BITF went above this $3.50 strike, and then you'd probably have to ride out the whole 45 days to expiration, and then you would either get called away or whatever. But big props to him. I think it was an ex-investor. Feel bad I'm not giving him full credit, but this was pretty cool. People who are new to options or just barely have any money to play with, this could be something that you could teach yourself the ropes. And I mean, hopefully $250 isn't your whole life savings. Honestly, I don't give financial advice. I'm not a financial advisor. But I probably wouldn't even start trading options unless I had I used to say 2 grand because you could get Mara for under 2 grand, but I think Mara's over 2 now. Riot is still under 2,000, and then Hut is now, you could probably start at 1,000. But something like this, I mean, I still probably recommend, if you got less than $1,000, $2,000, just work your job and scrimp and save until you got that, and then you've got something to play with. Because if all you got is $250, and this BITF, I don't know jack shit about this company. They could be terribly run. I have no idea about the fundamentals. I don't even look up fundamentals. I don't do technical analysis, and I don't do research on companies really, a lot. I basically just check and see, okay, does this company have like bankruptcy rumors or something? And if not, then okay, we're trading. That's how I feel about it. But something like a GameStop, they're doomed. I don't think anybody that's holding out hope for another short squeeze on GameStop, that's going to happen. I have been following an account, YouTube channel called Quant Bros, the Jeff the Punter and the other guy's Ryquant. But the next short squeeze that I hope to get to become a part of is MicroStrategy. Now, this is a far cry from the $2 BITF, but everybody has to trade within their their portfolio. Trade size is important. And so even on this 5K account, though, I went ahead and grabbed 0.3 shares of this, because if this gets a short squeeze, which these guys said, look, if this does pump, it's going to catch these institutional investors by surprise, because they don't have a big position size. But if this gets away from them and this gets up to like a 10 grand or more price, they'll be like, oh crap, my small position is all of a sudden a huge position. And then they have to start buying it to cover, and that's the whole point of the short squeeze, and then it just drives the price up even more. So this could be a crazy time over the next year and a half to see what happens with this. So I'm not even like 100% on how the whole short squeeze stuff works, but these guys are talking about it, and I'm here for it. I can't wait. So, yeah, I mean, not making any trades today. Just happy to see, after a couple of weeks, back to where I started. So now I feel like I'm getting a do-over after losing 20% in the first week or two, buying Bitcoin stocks at the all-time high. So, fun times. Whether you're in BITF or something or MicroStrategy or somewhere in the middle, to me, selling covered calls is the best way to increase your chances of success. If you're like most people that suck at picking stocks, every time you sell the covered call against your stock, you're reducing your cost basis, which if you give yourself a discount, every time you give yourself a discount, you have to have a higher chance of success. So the buy and hold people are just like, okay, I'm in it to win it. I'm just going to hold. And whichever way fortune, the winds of fortune blow you, that if it blows you down or, blows you back up, that you're like a balloon in the wind or a kite. Tumbleweeds, I don't know. So I don't like that feeling. I'm an active investor. I'm an active participant. I'm an active trader. I do not like the feeling of passivity. It just doesn't make sense to me. To me, it just makes sense that doing good work will be rewarded more than just doing nothing and handing your money over to somebody else to do the work for you. So I think it makes sense mathematically. I think it makes sense for me philosophically. So that's what I do. Oh, boom. Perfect way to end. Just, I'm $4.83 to the good. So my 5K challenge is now 5K, $8.26. Ending it there. Be good, y'all.